We are
Oh,
live.
it does. Never mind.
All okay?
Yeah, I was gonna say, do the YouTube comments come in through? But I
Yeah,
see
can
it
you
now.
see them on your side?
Yeah, I see them now.
Okay, great. This is cool. So we can actually flash them up and address questions after we go through the deck. Hello, everybody. There's some first Fireside chat people. This is awesome. Also, there's two firsts. This is the first time we've ever had a dog here and the first time we've ever had Jacob here. So welcome, everybody. Jacob, how are you today?
Great. Yeah, I'm doing great. It's yeah, markets are always fun. So happy to be here. Happy to talk to everyone. I talk to a lot of people, and so it'll be good to, yeah, this is always fun.
Yeah, you probably know everybody here that's in the crowd. Let me see. Where is the deck? There. Oh, no. There. Boom. All right. What we're going to do, everybody, who gets about 300 people in. Thank you all for joining, and thank you, everybody, for the support. We're going to go through a quick presentation that tackles a lot of the top issues. And sometimes you got to say things many, many times for people to get them. And we're going to go through some of the most important things in my mind. Like this journey is nearly 5 years old for me right now. It's crazy how time flies. It feels like 6 months, not 5 years. But I've spent the last 5 years with a great team to build things, to really find ways to help others. And from my experience, all of the things that have tripped me up in my life, we've tried to build to make sure you don't trip up and make the mistakes that I have made. And let's get into our presentation. So I'm going to go through this pretty quick. In fact, I might actually turn off our cameras as we go through this, and then we'll pull on the cameras later, and we'll go to TradingView later too. But I'm going to go through this pretty fast. And literally, I have a trading setup not unlike this image here. But we'll go full screen, and I'll blast through a couple of items. And Jacob, chime in, of course, whenever. These are the top things that I think people need to be aware of. Very quick agenda. I will share this deck with Patreon after this session, because there's lots of golden nuggets here you need to be aware of, kind of tips and tricks, and hammer these things home, because I believe me, if you want to be successful at this game, be humble and keep your tools very sharp. So first of all, overview of the tools. I do want to touch on one thing. We spent a lot of time, many years, a lot of money building out the IA profiler. And the reason for that is it's critical to know who you are. If you do not know who you are, you will not be successful. You need to know your strengths, but more importantly, you need to know your weaknesses. And then we'll talk about different tools along the way and how people can, based on who they are, make money. But I do want to stress this. And I follow all the greats since I was a young child. Albert Einstein, Leonardo da Vinci, all these people, all the best investors. I know them all intimately. Get to know your blind spots. We've built a personality profiler around all the best people. And this is something I subconsciously knew, but wasn't fully aware of. But really spend time to know where your strengths are, where your weaknesses are, and then get tools to shore up your weaknesses. Jacob, any thoughts on this? Blind spots. Do you have any, or did you ever have any in your life? Or are you just perfect?
Yeah. No, what I wanted to say about this too, and I know we'll talk a little bit more about the profiler. I think who you are also changes, and so just be aware of that. And like, I take the profiler quiz. I try and take it like once a month or every few months, just to make sure if there's any blind spots that I'm missing. For me, I mean, maybe it's my age, maybe it's who I am. One of my blind spots is certainly FOMO, feeling like things are going, I got to jump in and not waiting for the right opportunity. Of course, that's where some of the tools come in. And so, I think I certainly fall into the wanting to get rich quick blind spot. And I've been working on it. I've certainly been working on that.
All right. That's cool. And a lot of you know, I actually built this channel. The mission was really nerdy at the time, was math, money, and freedom. But a huge part of what has made me successful is math and analytics and model building. And I want to stress one thing, which is very, very important, and that's the miracle of Confluence and the power of backtests. And what this little table here shows you real quick, and I've shared this before years ago, and I'll share it again. When you have multiple indicators, each with a decent backtest success rate, and they all point to the same conclusion, i.e., if they all say, yes, 70% buy, 80% success if you buy here, 95% or 70% or 60%, whatever, you put those all together, the more confidence you have across indicators, the higher the chance that they're wrong drops exponentially. Basically, it increases your chance of success exponentially. Simply put, if three models with backtests say no backtest, no IDSS, for example, Confluence model, 70% sure you're going to have the successful trade, trend model 80%, and mean reversion 90%. Combined, all of those together have a huge success rate. Basically, uncertainty is removed, and that gives you an edge in the markets. Not all the time, you 10% of the time, 20% of the time, you may miss, but the key is to be right most of the time. Jacob, any thoughts on your experience with this?
Yeah, I think you have to realize too that 90% is 90%. It's not 100%. So I remember when I first started, I would have a few wins and then would have a loss, and then I would start to question the tools. But it really does come down to probabilities and sharpening your tools, and the more experience you get with the tools, then your win rate continues to go up. But again, it doesn't mean that it's 100%, right? Things can always happen. Macro news events. Nobody knows when someone's going to lose a partnership or some kind of big news will come out. So, but yes, when I trade now, I look at IDSS, Confluence, trend mean reversion, but I'm also looking at ATR. I'm looking at Lila. I'm looking at rotation model. Then the more that I can find across many, many, many different indicators, the better. So
exactly, and that's critical for people to understand. Now, before we get into the nitty-gritty of tools and how to be successful and other elements, I do want to stress this again. Know your blind spots, okay? Also, overcome your fears. The reason we share this is this gives you the confidence to overcome your fears. That's the reason I called it DSS. It's a decision support system. The hardest thing that many people have, number one challenge, not the hardest, but hard, is buying. And then number two, which is harder than buying, is selling. So get familiar with selling. I've been selling MicroStrategy in tranches for 10, 11 months now. Not only for myself to reallocate and rotate into Tesla, but also to give you all the muscle memory of what it takes to have that courage to sell. And don't worry if you leave a few dollars on the table, but understand the importance of pairs and rotations. And don't be afraid of selling too early or too late. Again, you never go broke making profits. And don't be afraid of technical analysis. I always say FA, fundamental analysis, is for what, and TA is for when. TA is your timing, and timing is everything. Jacob, what's your experience?
I think FOMO is something that a lot of people struggle with at the beginning, especially. And especially selling too early is like the worst feeling ever, because you feel like, I knew it. I knew I should have held longer this time. But again, everything, we'll go more into the tools and stuff later, but everything mean reverts. Everything always comes. There's always an opportunity. It's taken me I feel like almost 3 years now to finally internalize that there is always another opportunity.
Yep.
And then the other thing too, layers are huge. That way you're always in a little bit, right? Or you always have cash to stack as we go lower. So layers are big too. All things we can talk about, but.
Yeah, and I do want to stress one thing as well. There are some things that I build, after studying the greats. There's people that have held the same stock for 40, 50 years, 10 years, 15 years, 20 years. And sometimes having that patience and holding on to things over the long term can be very powerful. Being too cute and trading too much can be very bad. So one of my core principles is I do everything around Pareto efficiency. That includes my trading. I have my 80% hodl bag. If I have $1 million portfolio, 800 grand is stuff that I keep and hold until the thesis changes. 20% are the edges I trade around, option trading, perp trading, etc. There is a slight deviation in that. The amount of conviction I have on Tesla over the last year, 2 years is huge. So I've gone extreme in leverage at all the big bottoms, and I've shared all the leaps and strikes that I've purchased, and you can map them all out and you can see where they're literally bottoms on charts. And that's also very important. But let's get into some tools and some of the questions that people have. This one is, if I have one focused week to learn, which 2 to 3 IA tools do I start with? Where do I subscribe? And how do I add them to TradingView? We'll go to Jacob to add them to TradingView. But my personal favorites is optimized trend. That was a mathematical problem. That was the hardest problem of my life. That was basically building custom trend models by every single asset. So on the fly, it calculates the actual trend based on the movements of that asset in real time. And it's unique out there, but that will give you a direction of where the asset is going, whether you use it on the 4-hour or on the daily. It is a Bible for me. PTOS, as I always jokingly say, if I was locked away in prison but was allowed to trade, that's the tool I would use, because that's where I can make most money to pay for my lawyers if I'm locked up in jail. And IADSS, that's the gold standard of trading. I do that to do all my synthetic longs, to how I do my 3-legged stool when I see a huge spike to the upside where I sell a call. That's how I do it. I use it, IADSS. What are your 3 favorites?
Yeah, for me, optimized trend, for sure, 100% optimized trend. IADSS, of course, as well. And then not PTOS for me just yet, although I'm working on it. Arb Cloud has been very good for me. And then even the new rotation model I've really enjoyed lately as well. But for sure, optimized trend and IADSS.
Cool. And one of the things probably people should ask why I don't use rotation model as much. I do use it. I keep an eye on it. But the problem is most of my accounts, most of my money are in taxable accounts. I don't have a lot of money in non-taxable accounts. If I had a multi-million-dollar tax-free account, I'd be in rotation model all day long. And especially with today, we saw massive moves in things like Robinhood, but on rumors of getting out of the S&P 500. I was looking at that on Thursday last week. I was ready to pull the trigger, and I was like, I already have way too much exposure. So anyway, and I didn't like buying above the $100 level because I thought upside would be limited. And one of my key rules is I like things to triple. Do I see Robinhood going to 300? No. Could it go to 150? Yes. Am I interested in 50% gain? No. Also, is looking pretty toppy on the chart. So that's why I stayed out of Robinhood. But let's get into timeframes. Very, very important. Timeframes on tools. First of all, 4-hour is my religion. I am a swing trader by trade. That means trading things every 4 to 12 weeks. And the 4-hour chart is perfect for that swing type time frame. But I do want to stress, I look at the 4-hour. Sometimes I look at the daily to get a macro view of where I am, even the weekly or the 2-day chart, sometimes to get a view for where an asset is going. But when it comes to striking, I zoom 4-hour, 1 hour, 15-minute, 5 minutes, sometimes the 3-minute if I'm perp trading crypto, because crypto moves very fast. But the 5 minutes where I go in to determine exactly my entry point and determining exactly when things are bottoming. Because I like things, imagine you've got Tesla falling down to 318 last week. I wait for it to bottom, drag along the bottom a little bit just before it starts turning up and you start getting the flashing shadow buy. That's when I go in on the 5-minute. Jacob, what are your preferred timeframes?
Yeah, 4-hour is very similar. Daily and the 4-hour is what I look at most often. 1 hour, I really like the 15-minute as well, depending on the strategy. What I do want to say too, though, especially for those that are just starting or thinking about getting started, you don't feel like you have to go daily 4-hour, 1 hour, 15-minute, 5-minute, 4-minute, whatever. Optimized trend on a 4-hour chart or on a 1-hour chart, very, very, very good. James likes to go bottom fishing and you're right, getting the precise moment it turns. There's years and years of experience behind that. we're not going to catch the full move, right? And so if you want to be more conservative, and as you learn, right, wait for the trend to change on those higher, especially on those higher time frames. If the 4-hour changes, especially if the daily changes, right, we usually see an extended move to one side. So but for me, 4-hour is kind of my sweet spot.
Awesome. Good stuff. Let's talk about stop losses. Another top question from people. How do I choose and manage stop losses with eye indicators so I don't get hunted or shaken out? Be very careful if you're using stop losses in crypto, because the market makers know kind of where you are positioning and they will hunt you. That's one of the reasons I used to share my perp trades. I do not, because when the community follows my perp trades, if everybody went 3x, that would be fine. But some people go 10x, 25x, and then we become a big honeypot, and then we get hunted as a group, and then we get murdered. That's the bad thing. But in terms of, we might pull up a chart here as well, Jacob, on stop losses, where to place them. Watch the layers. Layers, everything. You layer in, you layer out. Get familiar with layers. They are golden. Don't think you need to get in one big bang shot or get out in one big bang shot. You increase your profits and your odds if you layer in and you layer out, and keep stop losses under key levels of support, or where things typically bounce. And we'll show you a couple, maybe you've got a couple examples there, Jacob, you can pull in. And also watch the optimized trend carefully in the 1 hour and 4 hour for real confirmed trend reversals, because sometimes things can dip temporarily just because a market maker wants to wick you out. Do not get wicked out. Let me see. Do you want to present?
Yeah, I can share a chart now.
You may have to hit the present button.
Present.
And I can pop it up. There we are.
Hold on.
Look at you. What's it called when things mirror like that? Amazing.
Yeah.
All right.
So
turn off your camera so you can go full screen. Okay.
Thank you. So stop losses. One comment that I would have on that is, so one, crypto stop losses are much harder than they get hunted much more often than stocks. So just bear that in mind. The other thing too is if you're investing in assets that you like, then like a lot of people won't use stop losses, especially for something like Tesla. If you plan to hold for years, right, it doesn't really make sense to have a super tight stop loss. So a good example of this though would be something like the ATR. Okay, I can throw my ATR on here, and if I were to have a stop loss, maybe somewhere under our level 4.
Jacob, can you blow up your screen, hit the Control Plus a little bit, and just so people can see the exact layers, because they're hard to see. Yeah, do one more Control Plus.
Control Plus.
Yeah, and just so the level, so you can see the text. Okay, and maybe use your little annotation as well. You're brilliant at that.
Yes. I don't know why it's doing this. Anyways, okay. So Tesla's currently right here, right? If we were looking for a potential stop loss, somewhere under a level 4 might be an idea. But again, one of the worst things that could happen is this, and then we go like this, right? And that does often happen. So if you're investing in quality assets that you want to keep, I'd be very, very careful with having a stop loss unless you're very experienced. Okay, so that would be one thought. If I come over to something like Solana, it's oftentimes fairly clear what ends up being a liquidation wick. So we can see here on a daily, if I were to zoom way in here, it's just funny how these wicks end up happening, right? We have a big move to the downside, and then within a few minutes, we'll be right back up there. So when you have your stop losses and you're perping, or you're doing your crypto trades, right, we want to make sure that we are giving it plenty of breathing room, and also not picking like whole numbers. Like whole numbers often get hunted as well. So again, if I were here looking for a 3x perp or something like that, keeping our liquidation all the way under a level 4, and I would even argue somewhere down here, right? And of course, the lower we go, the safer. So we can use these layers, these level 3s, level 4s, things like this, to help us look for invalidation points and place places we can put our stop losses.
Exactly. Good stuff. All
Okay.
right, let's get back to the questions, because we're going to do live questions as well after we get through these top topics that people have. How to set up IA indicators with a beginner's mind. Not everybody is an expert. So again, most importantly for me, this is my perspective, and I always stress, find your own rhythm. Everybody's unique. Everybody has a unique preference of assets and a unique trading style, a unique way to use TA. But for me, first step, define what you want to do. Write it down. And then the thing is, what is the Bruce Lee expression? I don't fear the man who's trained for 10,000 hours. I fear the man that's trained one kick 10,000 times. And it's the same thing with trading. Find something you're really good at with a very high success rate and keep on getting better and better and better. Don't try to do everything unless you got time to watch the markets and have a whole bunch of different strategies, but stick with one thing that you know works for a long time. Write it down. Have goals. I am massively huge on planning, and I learned that in Switzerland. Goals, plans, 5-year, 10-year, 25-year plans. Put them on your mirror, watch them every night, stick to your plans. Like things like 1 whole coin for Bitcoin, 300 Tesla shares, all that stuff. And then choose one indicator. Again, figure out what your blind spot is maybe and use that indicator to shore up what you do. And then set up charts on the longer time frames first, like the 1 day or the 4 hour, etc., and spend time in the community. There are so many gurus in the community, especially on Discourse, where you can learn a ton of information. Same thing with Jacob. And Jacob has his own style too. He's not like me, although I hope I rubbed off a lot on him over the years. Jacob, what would you recommend for beginners? What do you tell your people?
Yeah. Pick. There's so many rabbit holes to go down, and I think going down rabbit holes is part of the learning process. But try and keep it to a minimum, just a few rabbit holes. But pick one to define what you want to do. Is for some, like you have on the slides, income. You want to get a certain amount of shares. You want to have a certain dollar amount, like whatever it might be. Pick the one thing that you want. And there's so many pretty objects out there. I would point to perps, options, pair trading, whatever, a bunch of different things. Again, if you don't have the time for it, you're going to end up losing, and study is so important. And then, hang out with like-minded people. We have a great community here in the Discourse, the community page, and we can show those off a little bit later too. And get the help that you need as well. I mean, for me, I spent 2 years in hanging out in the Discourse, watching all of James's videos many times. Okay. So lots of
one thing you said there is very profound, Jacob, as well. People that are not successful is the people that treat this like a hobby. Jump in, do an hour a week, 2 hours a week. It's not. You're playing with real money. This is a very serious game. And remember, it's a zero-sum game. People always forget that. They think, I'm just going in to play against the market. But on the other side of the trade could be somebody like me or Jacob. You've got to be better to beat us. Okay? Very, very important. Remember that, and keep your tools sharp. Take it very seriously, deadly seriously, as much as your career. Maybe it is your career. And that is the key to success as well. Next question, how do I use IA indicators to time entries, exits for Tesla leaps and synthetic longs, and estimate option limit prices ahead of time, etc.? We covered actually a very good question in the Q&A yesterday, broke down some of the reasons for leaps and synthetic longs. I don't give away my trade secret of synthetic longs on YouTube. I keep that just for the community. I'm the only guy that kind of does it en masse with tools. So again, it's kind of like my infinite money glitch. But timing entries next is, again, optimize trend on the daily and 4 hour, and then zoom in. Then IIDS has confluence signals. And I look for mean reversion. There's a little trick here as well with mean reversion. You want things to be in an oversold condition using mean reversion, but you don't want them to be too volatile. Now, if there's a huge dip down, let me put on my camera so you can see my little hand signals, a big dip down, that means the put prices will be very expensive. And you'll notice I sell at bottoms for that exact reason. When the price dives and you see the mean reversion going to 2 standard deviations to the negative, the puts become very expensive. And even if the price stays the same for 2 weeks, you'll see those puts get cheaper and cheaper because the volatility is gone. That's the miracle. And I take that big bag of cash from the fear from selling the put. Remember, I'm selling insurance, and insurance is expensive. I use that to fund my call buying. That's kind of my little secret. Jacob, how do you time your entries for leaps?
Yeah, I mean, I think for me, selling puts is expensive. It's a large margin requirement. So for me, I'm not always selling puts, but similarly, we really want to find when volatility has died down, because the calls also go up in price, right? Because if we have a huge dive down, yes, calls drop, but you got to think about the other side. Someone is selling you a call, and most people know that it's going to rebound at some point, right? So the calls don't drop quite as much as we would hope. So in times of really sideways action, good example is Tesla the last 3 or 4 months, very tight, well, not super tight range, but in a range and pretty much just going sideways. Calls are getting much cheaper during this time before we break out. So for me, I mean, same thing, IDSS, looking for a range, looking for volatility to die down, right? If we're just going to buy the call side, we need the volatility to die down before it explodes.
Yeah, cool. We have another thing. Let's jump into the next question. And this is a key topic, and some of the stuff is hidden incorrectly. We'll ignore that, turn off the cameras, but these are examples of the perps that I have running. I've got 6 perps running in full disclosure, but somebody had a question. Can you show a realistic pair trading on steroids income plan, capital needed for $5K a month? I just want to show you, if you can use perps carefully, I have a lifetime options trader. I love perps. I think they are absolutely fantastic. The use of perps in combination with tools, easy way to make money. But I'll show you what I call the salami slicing plan as well, which is a little bit kind of more interesting. And that is, with the volatility you have within things like crypto, you can make 5%, 8% every day. But conservatively, let's say you make it every week or 2 weeks. If you can make 5% every 2 weeks, you start with $25K in capital. You can turn that into nearly $90,000 after a year, compounding. If you take it at 8%, it can go an awful lot higher. You can turn 25K into 160K in 12 weeks and 12 months. And that's what I was trying to stress with the community. Don't get greedy. Just play the edges, play up, play down. And how I use pair trading on steroids is I use the special signal, which is a special inversion signal for when things get overheated and when things get oversold. When things get overheated, you play up long to the upside. And instead of doing a 3x long on KuCoin, which I don't have access to in my jurisdiction, I do a 3x perp long. And then when I see it getting overheated or topping, and confirm that signal with the optimized trend, which is part of pair trading on steroids, or look at IDSS, exit 5% profit. And then you can take 5% profit on the way down. And sometimes literally you can make 5% up, 5% down in hours. We're talking the same day. But I want people really to understand the miracle of compounding if you are not greedy. And this involves in, out. If you are tax-free trading, especially, this is awesome. And you can also do it with equities. You know, you got your 2x, 3x long assets from things like NASDAQ, stocks, Tesla, etc., NVIDIA. But be careful holding those things for a long time because the fees will murder you. And that is how you build an income plan. But the easiest way is think salami slicing. 5% a week, make that your goal. I used to know this one guy who's in the community, and he'd day trade for the first 30 minutes or so the market's open. And if he made his money for the week in the first half hour of trading, he'd go hike for the rest of the week. That's it. And then he'd come back the next week and do the same thing. Maybe it would take him 3 days to get to his goal. Then he'd go hiking for 2 days. That's salami slicing. Does that resonate with you, Jacob?
It should. It does. It does. it every time, especially in perps, every time you get greedy, you get your face ripped off, as James always says. And I've experienced it firsthand. And of course, not pointing out any names, but I work with many people, and there are far too many people that have lost multiple six figures perp trading, and they don't have multiple six figures to lose. So tight stop losses, keep it simple, low leverage. Again, when you start using 10x, go ahead.
So important. So I always stress the two rules that people always ignore. Never more than 1% of your bag. Okay. Allocating to perps, because market makers will hunt you. But if you stay at low leverage, like 3x, they don't care about you. You're not on the radar. So if you're entering a perp at, say, $200 Solana and you're 3x, they got to push the price all the way down to 135, 140 to liquidate you. They're not going to do that. You're too far out of reach. And that's why if you do low liquidity, get 3x, throw a little bit on the table, wait, make your 5% leave, and then wait for the chart to tell you when to enter again. Yeah. Simple as that.
We've seen that even just to illustrate that further, right? Today, right? Solana is up 4 or 5% today. If you're on a 3x, let's say you got in a few days ago, right? You're on a 3x, you're up 15% in a few days, right? Yeah. And people are saying they want 15% returns per year. So, yeah, on the higher leverage you go, you're going to get hunted and you're going to lose. Keeping it, 3x, I just checked, a 3x leverage, they would have to push price of Solana all the way down to 145, which is just not going to happen.
Jacob, do me a favor with this chart here. We'll show the team a little trick. Okay, first of all, turn off your candles because it's hard for people to see. Turn on the line. Yep.
We'll zoom in here too.
Exactly. 1 hour is fine. Yeah, zoom in. But just actually zoom out, because I just want to show them the power of, you must be on bullish or setting. Why can we get so many sell signals? Is your Confluence on neutral?
Should be. Yep. Yes.
Okay. And all right. But just ignore that. Blow up your mean reversion or overlay the mean reversion on top of the price chart. This is another little trick too. You can actually maybe expand it so you can see.
Make it big like this. How about that?
But yeah, when you go above your standard deviations, I can't see how much you have, but I'd make the red colors bigger. When you see those big mean reversion spikes, the big red dots to the upside above the red ribbon, that's when you start preparing to go short. But you do not go short until the trend changes. We wait for the orange to then enter the short. So you ride it up from the green dot at the bottom, okay? And then you wait for the mean reversion at the top to get out. And then you go short the other way, all the way down. Follow the orange, yellow brick road all the way down. And that's the beauty of playing both sides. You mentioned you can make 15% in a couple of days, 3x long on Solana, where you can do the same thing down, because it will get overheated and it'll probably sell off into the week, Tuesday, Wednesday. So simple little things like that, or, if you want to do the salami slicing method, that's one good way to do it. All right. And we'll get to questions as well in a minute, but let's get back to another one. Which time frame should I run optimized trend on, and how long do you expect these trends to hold? Which flips should I ignore versus act on? Very important. First of all, the daily, the 4 hour. 1 hour trends can be used as well. And 1 week trends for macro views. If you want to see, for example, when the Bitcoin bear market is, look at the weekly, things like that. And other assets can have bear markets too. But I want to stress this one thing as well. There are different trend durations by different asset classes. Crypto, highly volatile, moves in 24/7, much shorter window. So your average trend duration for optimized trend could last 11.5 days. For mega cap stocks like NVIDIA, it could be 15 days. For ETFs, indexes, 22.5 days. And these are trading days. So again, always remember, when you're dealing with different assets, different time frames have different impacts. Jacob, agree with that?
Yep. Yeah. Every asset and optimized trend does a lot of the work for you. General rule, the higher time frame trend change, typically the longer the move is going to be. If the daily flips expect, but potentially a long move in one direction or the other. Can I share a chart here real quick?
Yeah.
Just something to watch out for. I know a lot of people here have been playing the MicroStrategy Tesla pair. And I just want to remind everyone real quick too, you have to look at the different time frames. And we also have to realize that the trend usually doesn't go like this, right? It goes like this. Okay. And a lot of the times people can get faked out by these pullbacks like this. Okay. So if we look at the 1 hour chart, and according to our system, right, every time that there was a trend change, we would have flipped assets. Yeah. However, you can see pretty much every single one of those would have been a loss or a very slight loss or very slight win. But a lot of people were bleeding out on this. If I flip out to the 4 hour, look at how the 4 hour is just orange, just down. So don't get cut up too much. Make sure you're referring to multiple time frames. And again, we don't go like this. We go like this. Okay. So just wanted to point that out for everyone.
That's excellent. And it's so important. That's why the 4 hour is kind of like the gospel. Okay, one last question, then we do live questions. We've got a team collecting live questions as well behind the scenes. If a model prints a buy in the 4 hour and then it disappears, what is the rule when until the flag sticks, exactly which candle time frame confirms? So this is one of the things where the model is looking at real-time information, and sometimes you get like a shadow buy signal, but the system is waiting for all the different things to hit before it makes a confirmed decision. Okay, so sometimes if you want to be very cautious, wait for that, and that'll avoid any false starts. What do you do, Jacob, in this situation yourself?
Yeah, the little ghost flaggies things, those are warning signs to me, right? Whatever, again, I don't know the criteria underneath, but whatever the algorithm, whatever the criteria is, they haven't fully been met. Well, that means some of them have been met. And so something is getting too hot, something's getting too oversold. And so, that's when I'm really, that might be when I move into a 1 hour, right? If I'm on a 4 hour, maybe I'll go into a 1 hour because, hey, maybe we're about to start changing here. So for me, I use them as warning signals that a flip or a signal or something is probably going to happen soon. Maybe I zoom into a shorter time frame. And then, of course, I would wait for optimized trend to flip, wait for other things to give me signal as well.
Okay, cool. Well, here we are. We're now going to go into some live questions. I'll probably have Jacob pull up a chart so we can address those questions with charts too. But that was the pre-canned session. We have the questions coming in here on Discord. So Doc in turn, woohoo! Doc in turn, you rock. In this choppy market, in a retirement account, which is better to trade? What I'm going to do is make sure everybody can read the same question. So I'm going to pop it up here and then share it so everybody can see it. All right. During choppy market in a retirement account, which trade is better, using the ARB cloud for MicroStrategy IBIT or switching between MicroStrategy and Tesla? That's a very good question. MicroStrategy IBIT is a very specific trade for the ARB cloud, but you can make more bang for the buck if you're on the right side of the trade between the pair trade, MicroStrategy, and Tesla. And I do want to say one thing. We had a couple of macro events happen that have hammered the treasury companies. One is more NASDAQ regulations that put treasury companies under more scrutiny, which is affecting them as well. So that's one of the reasons for the NAV premium being as low as I've seen in years, of 1.31 today from MicroStrategy, even despite a small bag. I think the big macro situation would be the most interesting one. If you want to make your salami slicing and you're really good at it, play the ARB cloud because it's very consistent. But it's become, sometimes you got to wait more time between trades. If you want to make big volumes of money fast, I'd go MicroStrategy Tesla and watch the 4 hour trend as Jacob showed you. Jacob, over to you.
Yeah, good question. Yeah, MicroStrategy Tesla, I feel like is kind of, I don't know. It feels like a little bit of the easier trade to me. It's very straightforward with the optimized trend. During choppy markets, I think, James, you can correct me here, IBIT seems to perform better. And obviously we've seen this lately. And then I would also say, not to get too complicated, but I like to do a mix of all of them. Right. If you're looking at the MicroStrategy Tesla chart, well, you're either MicroStrategy or Tesla. Okay. If it says MicroStrategy, then I should probably refer to the ARB Cloud as well. Right. So we're starting to layer different strategies on top of each other. I really like the MicroStrategy Tesla, and then you're not worrying too much also about like the NAV premium and things like that. We're just worrying about which is outperforming the other. So
exactly. Cool.
Yep.
A couple of quick questions popped in too. This is from Zev. You said your jurisdiction does not allow KuCoin, so using Coinbase for your perp trading? No, I use Jupiter and Drift to do that as well. We had another question from Glass Half Full, and then are there instructional videos on how to use things? Well, we have Jacob that does 3 a week, and then in Discourse we have tons of videos by product. Can you show Discourse there where you are?
So can I show the website and Discourse?
Yeah. Yes, please do.
Okay. So really fast, I wanted to give, because I've also seen questions, like had my eye on the chat earlier. Some people asked about how we get the products in the first place. So I kind of want to go through really quick how you get to the profiler and to take the quiz, and then going through the products real quick, and then all of the resources that we have available for tutorials. So investanswers.io is where we, investanswers.io is the website that you can get all of the products from, right? And then if we scroll down, here are the different products that we have. Now, when you decide which one you want, you can also take this investor profiler quiz, which I would do this first. Take this quiz. It's only 13 questions, and it'll tell you more about yourself, and it'll recommend products for you. Okay. Now, if you log in to your account, it will actually save your past quiz results. And so I just took this yesterday, and I am the Ranger. And then it will recommend the different models for you based on your personality type. Okay.
That's cool, because I know you love ARB Cloud and IIDSS. So it shows.
I know, it's funny actually that worked out. So, yep. And then, so now if I scroll down here and you have an active subscription, okay, you've decided to purchase something. There is this button now that says user guides and videos. So I click on here. And now, because this is the suite, and this is a lot of content, but this is the suite, and because the suite comes with every single product that we have, you'll see a bunch of different tabs here. Okay, if I wanted to learn more about ARB Cloud, right? If you're the Ranger and you want to learn about ARB Cloud, I'm going to click on user guides and videos, and now we have 1, 2, 3, 4, 5, 6, 7, 8 resources for you on ARB Cloud. So if I just click on like pair trade, whatever, then there's me. There's me giving a training on the ARB Cloud. Okay. So, and then if you want to learn about Tabby or DC on Star, any model that you're subscribed to, we have these user guides and videos. Okay. Now, the other place to go for this is the discourse. The discourse. You'll want to go to community.investanswers.io. Okay. And then you will log in with your Patreon account. You will log in with your Patreon account. Once you get in, this is where you will see indicator support. This is also where you have Sunday Q&A submissions. This is where you can submit questions for that. So for example, on the left-hand side here, I have this Sunday Q&A category. And then this is for this coming the 14th. You can just post a question in here if you have one. All right. Now, as far as indicators go, so we're going to come to the brown section, which is indicator support. You will only see this if you have purchased one of the models. If you haven't yet, you won't have access to this category. Then I'm going to go to user guides and videos here. And then I'll scroll up here. And now all of the videos that you could think of live in here. Okay, all the videos that you can live in here. So whether you want coaching, right, here's the list of the coaches in the community. You can sign up with them here. And then if we come down here, here's Arb Cloud, here's ATR, here's Bitcoin top and bottom. Okay, so there's videos for every single one of the indicators that we have.
Yeah, I'd also like to add one thing to that as well. Follow some of the legends in the community as well. There's people like Gregism and others, Cypher Sniper, people that are just there sharing their tips and tricks, and Anderson W, gurus on PTOS, etc. Literally, there is a billion hours of knowledge in here, and there's something for everybody. And even if you are local in a part of the world and you want to understand what are the best Australian stocks to play, you have all these answers here too, or Canadian stocks, etc. So this is awesome. Let me see, there's a couple of quick questions came in. I'll pop them up here. This is from Gizmo. The SpaceX deal with EchoStar. I consider EchoStar Dish Network a zombie company, so I wouldn't get too excited buying that. Maybe you can pull up the chart on Dish, EchoStar, if it's there. I haven't looked at it in
this
years.
one, isn't it? This has gone crazy.
Yeah, well, it's moved, and it's moved because of SpaceX. Anything that touches SpaceX will go to the moon. From what I understand, SpaceX are buying cell phone wireless bands or something, and it's a $17 billion deal. Half is cash, half is SpaceX stock. So basically, they got $8.5 billion of SpaceX stock for this. What's the market cap of that company right now? Go to financials.
It says, 23 billion.
Okay, so that's kind of crazy. So literally, the amount that SpaceX spent on their asset that they had is pretty much their entire market cap before it popped. More. That's incredible. That's an ARB opportunity, but you have to have insider information to know that that's going to happen. And it's good to see that nobody really knew it was happening because nothing really moved for a long time. So, yeah, that's interesting. I wouldn't touch it here. I think it's probably fairly valued. Again, it was a zombie company, not anymore.
Yeah. The market cap before the acquisition was 5 billion.
There you go. And SpaceX just paid them 17. So it's nearly 4x the market cap. It's wild.
Yeah.
Wild. Another question from Rambling Roy. I bought a bunch of Tesla Leaps at 230 strike. Well done. When the price dipped below 320. Okay, that's not good, actually, because you're a little too far in the money to get a good return on those leaps. Always try. Your rule of thumb where you begin is half intrinsic value, half time value. If you're looking at a $300 strike, I think the dog is doing something. Come here. Stop it. Munching on stuff. So be careful. Don't buy so deep in the money. Try to get close to the 300. So if we do see a dip, like if I see a dip to 335 again, I'll be buying more $300 leaps. But I'm getting very heavy on my exposure side. I have literally my equity and my leap position are equivalent, which is not good. Let's see what else. That's good.
I can ask a question on that to you.
Yeah.
And I've heard this question asked actually quite a lot. When you refer to half leaps, half equity, are you talking dollar value, or are you talking, one leap equals 100 shares?
So imagine I've got 10,000 shares. Yeah, I'd have 100 leaps.
Okay, so you're doing it by that. Okay.
Yeah, so I'm literally equitable, and I watch it very carefully. That's why sometimes I buy spot, because I don't want to blow up my account. And there's always a risk as well, because I sell a lot of puts. Like I have nearly a scary amount of puts I've sold at the 330 strike. If Tesla goes down to $100, I lose a lot of money. But what you have to understand too is those 330 puts that I sold, most of them I sold for $100. So my break even on that put sale is about $230. Will Tesla go back to 230? I think it's highly unlikely, but everything is possible too. So that's the way you got to think of it, everybody. Equity is a straight buy, but I also use margin too. I'm currently using about 16% of my margin, maybe 13%, depending on how strong the asset is. Like, for example, if Tesla goes to $400, I'll be using about 8% of my margin. because that is my margin. Things like MicroStrategy and Tesla.
Yeah. And on that note, with just real quick on the 230 strikes, so for everyone at home, the deeper you go in the money, the less leverage you're going to get. And there becomes a point that it's not really worth the risk, right? Because with options, the risk is zero, right? Like if this doesn't work out, you lose the full amount. Okay. So if you're all the way down at 230, you're probably only getting like 2x leverage, maybe.
Yep.
And at that point, you should just buy in margin. If you're at the money or close to at the money or slightly in the money, then you're closer to 3x. And of course, the higher you go, now you're talking higher leverage at that point. But we don't typically go out of the money. So just keep that in mind. The deeper you go, you're basically paying a bunch for it to potentially go to zero, and you should have just bought on margin instead.
Exactly. So back to Hood, if you can pull up the 5-minute chart on Hood, turn on the Confluence model. I was looking at it, you turn off MR too, but at that little green flag there, I was tempted to buy just under $100 and I ignored it. That was on Friday. I saw that signal. It's in my watch list. I go through 200 stocks every day looking to find deals. And I ignored that. And that was a mistake. That was an easy 20%. But the question came up was from So Very Grateful for quick spikes like Hood this morning, which time frame do you use? And that'd be the 5-minute chart. Now you can pull up the mean reversion, and now you can assess the probability. Will it mean revert? And then zoom out in a longer time frame. That would be interesting. See that big spike there? That typically means, unless things are kind of crazy, you would want to maybe get out of the position or take your profit here. But that is incredible. But zoom out on, say, the 1 hour, it'll give you a better feel for where we are.
Still 1 hour, still, yeah.
So this I do expect to probably do some mean reversion. But the problem is, the reason it's moving, again, keep your head out the window, it's because it's rumored to be added to the S&P 500. And there's a high probability, 60% chance it will before the end of the year. So people are front loading that addition. Okay. So that's that little piece on the Hood. We have from Luke in Florida. Let me pull up this so everybody can see the question. Pop this up. What do you suggest for someone who's getting started focusing on for the most upside, taking into consideration where you predict AI is headed by approximately 2027? So the safest for me, risk reward, because I'm moving, I'm moving large dollars around. My safest risk reward that I can play with extreme leverage with very little downside is Tesla. And that's why, you can take flyers on things like Circle, which I'm short at like, I think 190 or something. But Circle is an example of the danger of IPOs. Everybody is excited. Wow, the IPO is incredible, from 35 up to 300. And look at that. But it is at last firing a signal. Hopefully it's not a fake out. I think it's close to bottoming. But now there's new fears regarding Circle that the new GCUL will come. But that's not going to be launched in 2026. So that's not a threat to Circle. Then the hype stablecoin threat to Circle. I still maintain the hardest thing for stablecoins is distribution. How do you get people to adopt it? And that's where Circle has the special relationship with Coinbase to do that. Anyway, what is your hot pick for AI out to 2027, Jacob?
Obviously influenced by James. Tesla, I think for sure. I mean, if you look at any of the other plays that have run this year, Palantir, Nvidia, and other names, they're way, way, way up. Whereas Tesla is up from the bottom, but not nearly as much as everything else. And so risk reward wise, I think Tesla is the play. And then of course, leveraging options in that usually works out pretty good. So not too much more to comment on that, other than I have also been loading up on Tesla calls. Good.
So let's talk to Captain Slow for a second. Captain Slow said, pair trading on steroids is a bit tricky on trending assets through like Nvidia, for example. Well, NVIDIA, we got that beautiful $88 gift. That April was a fantastic time. And by the way, the very first thing we mentioned at the very beginning is having the courage to take action during those moments. Those moments come up once every 1 year or a couple of years, like a mini gray swan. You got to be prepared to jump when they present themselves. And that was the biggest dollar purchase I spent in a day since March 2020. To give you an idea of how I had the courage to run into that burning building, but sometimes you need that. So regarding your answer, Captain Slow, pair trading on steroids, watch the trend. That's why actually we bundled optimized trend with pair trading on steroids to make it even more powerful. But at the same time, I find PTOS works really well for crypto. I haven't actually used it for other assets. I use IDSS, ATR for macro view on other assets, but pair trading on steroids typically for me is just crypto.
This is also an instance of looking at your other time frames. Like here's NVIDIA, right? PTOS, you're playing both ways. Like the intent is to go short and to go long.
You want to zigzag up and down the whole time.
Yeah, this is just up.
Yeah.
So you don't want to be pair trading this. And now, if you go into the 5 minute, you're gonna be like, oh, well, it goes up and down on the 5 minute. Yeah, but you really need to go look at the 4 hour. The 4 hour has not changed from orange to orange again since from April to end of August. Okay, so this is not really a PTOS candidate, as it just goes up and up. So
yeah, like what is very good for PTOS, things like Drift and Jupiter, they work really well when you trade them. And just look for things that are range bound, what I call range riders. That's one of the great things about charts. You can spot different behavior very easily from these types of things. Quick question from Tommy. We'll pull up some live ones too. I like scalping on the 5 minute or 15 minute. What tools do you think work best there? 5 minute IDSS all the way. ATR is designed for longer time frames, but IDSS is when I scalp or when I enter a trade, I'm looking at the 5 minute. Again, I go from the 4 hour, 1 hour, 15 minute down to 5 minute. I don't actually spend very much time in the 15 minute. Sometimes I just go from the 1 hour down to the 5 minute. Okay. Let me see. Debo, can you explain when you use the ATR model? I use ATR model. In fact, did I say that? Hang on a second. Let me pull up this question. I use ATR model to understand where an asset is, where it's coming from, where it's going, and where it sits on the support and resistance levels. So a very fun story. ATR model was actually built to identify zombie companies and zombie cryptos, things that were dead. We had the special ratio called zombie coefficient, but people probably would have found it too offensive, so he got rid of it. But what it is very powerful for is gives you the ranges between layers of how an asset moves and how far it is away from all-time highs. So I did this analysis a year or two ago. I analyzed 3,000 stocks across a whole bunch of traditional ratios, financial ratios, and I found 10 assets. One of them was SEA Limited. And then for the final 10 from what got spat out from my financial analysis of very overvalued, very undervalued good assets with very good financials was kind of what I was looking for. And then when I saw it on the ATR chart, I said, that's the one. So that was, without even knowing anything about the company, it was chosen based on financials and the ATR model because it was crazy oversold. I don't know if you can pull up SE on ATR and you'll see what I saw. And zoom all the way back to the history. And I said in that trade alert, I said, it's probably going to mean revert to where we are. And we bought it at $40. I didn't even know what it's at now. It's probably near 200.
190.
There you go. And but look, so if you look at the ATR and zoom back to the previous all-time highs and how it got so hammered down and how it's just making its way back up. And sometimes these moves take 2 years. And I thought about taking profits so many times, but I said, you know what? This could be just a good, solid keeper. Now it's become a substantial position. And it's a synthetic long. at a very low base. So it costs me basically nothing. The cost basis is so low that it's just worth holding on to. So that's how I use the ATR. What do you use the ATR for?
Yeah, ATR for me gives me, yeah, very similar. Where good areas to where the good assets bounce at, and where we can expect support and resistance to be. So, like one interesting observation that I've made, something like Nvidia for hyper trending, strong, super strong stocks, right? They continue to stay in between level 5 and 6. So anytime that there was a buy, or anytime that price came into level 5 for Nvidia, that ended up being a good buy, right? And then of course this happened, and that was the screaming buy, because strong assets don't usually pull back this far. Okay, so this is kind of what I use it for, is where might some of these things pull back to. Something like Tesla ends up pulling back to level 3, level 2 occasionally. That was in April of last year. So this is where this was the initial big drop here with the whole tariffs, was level 3. So anyways, I use it, and you'll find patterns the more you use it, where stocks tend to bounce out of and where you should be loading up. So if I was looking at Tesla right now, I would be loading up, because I don't really think we're going to get back down here to this level 3. So when we get close to level 4, right, which is 300, or I mean, if you get anywhere close, 320, 330, and you've been meaning to buy Tesla, that's where I would be looking to buy, in between these levels. Because once we break out past 5, likely we're off to the races.
Yeah. Okay. Time for some profit taking model. MB, any advice on how to start selling Sol at level 6 in the profit taking model? 220 seems like such a low number to start selling at. I know I should sell, but how do we convince ourselves to do so? Well, that's why we built the profit taking model. And even though one of the biggest fears, as I mentioned again at the very beginning, fear number one is pulling the trigger, buying something, but an even bigger fear is selling something too early. But this will mathematically convince you. If you have you can plug in your cost basis, your number of holdings, your profit taking aggressiveness. You can plug in all these settings. This whole machine gives you the answer. And this is for people that don't look at the markets every single day. I look at the markets 24/7, 24 hours a day. There's never a 2-hour period that I don't know what every asset's at, because crypto's 24/7 and I'm up during the night looking at it. So this is for people that can't, and it'll give you the discipline to take that money off the table and rotate it into something else. Now, is Solana very undervalued? The answer is hell yes. It's ridiculous. It's trading at 1/5 of the market cap of Ethereum. And if you heard Marty today, it's a joke. And the emperor soon will have no clothes. I know people say, oh, Ethereum's great. Ethereum's great. It's got big TVL and everything else. The problem is it's simply not fast enough at 15 TPS. And when I say that, I upset people. It actually runs at 14 transactions per second, not even 15. And people get upset. But I'm a technology investor. I'm a disruption investor. Tesla or Ethereum, its days of disruption are over. Okay, it's too expensive to use, too clunky to use, too slow. It'll never service the world, period. And now we've got murderer's row of layer ones coming down the pike that have better product market fit, better user experience, better finality, better speed, fractions of the fees, all that type of stuff. So that's how I invest, based on fundamentals, and I use TA to time my positions. Back to profit taking. Walk us through where we are on the profit taking for Sol and what you would tell people without giving them financial advice.
Yes, of course, of course. Yeah. So having a plan, got to have a plan, especially like James said, especially if you aren't looking at the markets. Now, what I will say too, just to give you an example of why this is important, if we come back to the double peak that happened here, right? This actually ended up going higher, right, because of the wicks. But we came back here, and then we would say, okay, one place that you can anchor the profit taking model is when price crosses the up above the 200-day. So if we were to do that historically back to here, look at what happened. Okay. Price almost perfectly. We missed level 10 by $6. Okay. If this was your plan and you had been selling on these opportunities, buying back in lower, right? You had a you had a huge opportunity to exit on this massive pump, hopefully start layering back in here again, and we're about to rinse and repeat, I think, right? So if we were to come back here and set our layers to here, right, we're not almost, yeah, we're almost to level 6, right? And level 10 is actually saying all the way out to 437, right? You don't want to experience this again. And I know nobody liked that, going from 300 down to 95 or 98. Nobody liked that. So this at least fine. If as it comes through here, you get out and maybe it goes like this, and then it goes woo back to 1,000, right? And then it's fine. So
yeah, that's funny. That was a toxic time, but that's the volatility of. We see the same thing. So when you are the most hated assets are the best performing assets, but they're also the most volatile assets. Nvidia, Tesla, Solana, you name it. They're just, bucking broncos, and they will kick the teeth out of you if you're not careful. This is why you have the discipline. And also remember, everybody, I'll share on Patreon the tax model again, because people forgot about it. We did it years ago. But it's the price at which you need to re-enter to recoup, say, short-term capital gains or long-term capital gains taxes. It's very important to know that. But if you are tax-free, or if you're long-term capital gains, you can exit and buy back in at that level again. So we pierce level 7, pierce level 8, take your profits, bank it, put it in JLP, put it in USDC earning 5% or whatever, and then wait. And if we go back to level 5, level 6, and we're still in a bull market, go back in. That's what you can do. And in fact, what you can do as well within the Lilo model and the ATR model, you can compress the levels and also play the ranges very tightly all the time. That's how you perp trade with PTOS up and down across those levels. So again, lots of little alpha secrets here that we do not share in the public world. This one is from Joseph. A quick question on... I'll pull up some other questions. These were preceded by the team. What about using ATR tool as compared to IDSS? IDSS is the gold standard power trading tool. If you are serious about trading, you need mean reversion, you need the optimized trend, you need the trend model, you need the Confluence model. And from the very first thing I shared, when you find Confluence across multiple indicators, your odds go through the roof and chance of success. And when your chance of success and confidence is high, you have much more courage to win. And then you learn to win. And then you win more and more. And then your gains compound very quickly. That is the key. ATR is just about understanding the macro position of the asset at a given point in time. Yes, you can use it for trading. We know a lot of people that are very successful on the 4-hour, 6-hour, 12-hour, 24-hour. There's one guy who works on an oil rig. He doesn't get to watch the markets all the time. And he uses ATR to get in and out of positions. Pair trade positions. It is very versatile, very powerful tool. But if you're really, really serious about your craft, then IDSS. I think I calculated once how much you need to have running in the market to justify. Like ATR, if you have 12 grand in the market, you can justify ATR. For IDSS with the cost, you need about $25,000, $30,000 in the market. So I hope that helps. Any thoughts on ATR, Jacob?
Yeah, same thing here. ATR to me seems to be more of bigger picture. Where are we in the big picture scheme of things? Not something to be too active on. Again, just identifying the key big picture support and resistance levels, and not the day-to-day spikes. Mean reversion, like you said, mean reversion and optimized trend are so key to any trading strategy. So, yep, IDSS is the gold standard.
Yeah, that's a good question from Ingrid. Can I use a profit-taking model with different currencies? Can you input your cost basis in euro? You can use the euro chart. That's a good question. I think you can. Can you?
No, let's try.
You can't change the currency, but if the chart is in that currency, the cost basis will be in the same currency.
Oops. Sol. Hold on. Sol.
EUR.
E.
I wouldn't even do the pair. It should just turn up as one ticker. SOL EUR. Like SOL USD.
Thank you. Yep. And then if we throw profit taking back on
Yeah, go
here,
to settings. Like it should just be.
yeah, it shouldn't matter. You should be able to just put in your dollar amount.
Exactly. It's funny, Ingrid, that you asked that question because I know people that trade Bitcoin, but they trade it even though they're in South Africa or Eastern Europe. They always think of it in dollars, not in their local currency. So, but a very good question. Let me see. That was a question from Luke that just popped up. What do you mean? So the models, we do have a development team to support. Many of the models that we've actually built, we lose money on. Some we get to break even, etc. But I personally have made a lot of money from the models, so it was worth the investment for me. But from Luke, what do you mean? How much you need for each model in the market? It's basically how much you trade. If you have a trading account of like $17,000 and you're in about 4 or 5 different assets, it's worth making the investment in things like ATR if you want to grow your position. And of course, the price of IADSS is a little bit more expensive, so you'd want to have a little bit more working in the market. That's kind of what I mean by that. And yes, the tax model, it is editable. You just file, save your own copy of it, and then save for yourself, put in your local tax rates and currencies. Good question from Crypto Cruiser. IRS wash sale rule involves selling a security at a loss and buying substantially the identical one within a 30-day window. This prevents investors from claiming tax deduction for the loss. Yes, but the wash sale rule does not apply to crypto. So you can dump, if there's a big dump in, say, Bitcoin, it falls down to 75K, and you want to take a loss. If you bought it at 100, you can sell it and buy it back immediately and take that 25K loss per Bitcoin as well. What else we got here? Let me know, mods, if I'm missing anything. This is one, Cypher Sniper. To decide when to switch from one asset to another, bring up a custom pair chart to figure out when you can get the most bang for your buck. Yes. And remember, as I also stress, great one, Cypher Sniper, everything is a pair. Everything is a pair. People don't understand. Sol USD is a pair. It's Sol versus dollar. BTC USD is a pair. TSLA is a pair against the dollar. Everything is a pair. So wrap your head around that as well. Let me see. Any other questions that I'm missing? This is Cypher Sniper again. Yeah, thank you for sharing all that information. Cypher Sniper is great. Appreciate all you do in the community. Any thoughts on CEP and Circle? I'm down on SLs. I'm in an SL too on Circle, but the key is allocations. One thing I haven't mentioned so far today is allocations matter. When you take flyers and these little things, don't go big. It's like never have more than 5% of Bitcoin miners or whatever. They had 2 great years, and all 2025 has been dead money. CEP, let me check.
I can bring that up too.
Yeah. Where is CEP? I can't even remember what some of these things are doing. Oh, yeah, that's just down only. Ugly. Yeah, that's a shame. A lot of things are waiting, I think, for this old season. Circle as well, brutal, but it looks like Circle's close to bottoming. And I thought it was a good value at 140, but now it's 113. So this is why I always stress you. Why do you keep buying Tesla? Because it's not risky. That's the reason. It's like super low risk, and that's that's why you do it. Risk reward. Come on, bring a couple more questions. I don't know how.
I could just jump in here. Rob asked, should we sell our ETH? And I would say, the answer to that from a investment standpoint, right? Long term. But but someone also asked about a pair, right? So you got to be thinking about, if you sell ETH, what are you going to go into instead? Okay. And so this is a good time to show off, right? Like, so the Solana ETH chart, right? What has performed better? And so when the chart is down, right, whatever asset's on top, in our case, it's Solana over ETH. Okay. Solana over ETH. Whatever's on top is the chart we're looking at. So if it's down, trending down, that means Solana is underperforming ETH. Okay. However, look at what has happened the last 2 weeks or so, right? Solana is taking the spotlight back from Ethereum. We've seen ETH run up to like 5,000 with Tom Lee and everything, and it has been pumping. So should you sell your ETH to go into Solana? That could be a question. And what I would be looking at is something like this, a pair chart, right? What is stronger? Well, Solana is the pick right now. And you can do the same thing, right? You could do ETH USD over Tesla, right? Do you want to go into Tesla instead? Well, actually, interestingly enough, recently, right, this is turning down, which means ETH is on top now. So Tesla also starting to outperform ETH. So that's how I would be thinking about that.
Yeah. Pull up. I want to show people something very interesting on the Tesla chart. There's a question from Futureproof. And could you show us a live run of Tesla? I'm going to show you something that is very unusual. But when you have spent your life in the markets, you begin to see these things happening. And what we're seeing here, we're not getting a lot of signal. And the reason for that is Tesla is under constant accumulation. So sometimes you see patterns in stocks that just every single dip is bought up. Its algos are stacking. Somebody in an institution like a JP Morgan or Morgan Stanley is saying, build me a bag of $100 million or $1 billion worth of Tesla. And they turn on the algo and it goes and buys all the dips. Because of that, all the volatility is taken away from the actual asset and it runs at a very tight range. So then you got to zoom in from the hour and you got to go to the 15-minute chart, if you can, Jacob, and then spread that up. And there you see a better way to play on how you can find your signals, your buys and your sells, and buys and sells. And then you can defeat the algos that are stacking this asset. Very important. But you're not going to see those signals on the 1 hour or the 4 hour because the algos are stacking. So be very familiar with that. You see that as well happening on Bitcoin. Bitcoin over the weekend, flatlining. It was being algo bought by somebody, probably Michael Saylor buying 2,000 Bitcoin. So is that the flat spot there over the last 2 days?
Yeah,
it was like a beep flat line, very tight range. Every single dip is being bought. And so that you can spot things in charts that otherwise you'd never find out about, but that means accumulation. Let me see. Jay Weirs, love the pair chart, Confluence and optimized trend. Yep. Everything is a pair, everybody. If you take one thing away from today, everything is a pair. Get familiar with all pairs and inverse pairs. And the real magic of trading is trading pairs, moving out of one into another, especially when we have huge macro shifts. Like I always think of things in 2-year, 3-year, 5-year timeframes. And anybody who's been in Patreon since 2022, 2021, they've known my plans. I have multi-year plans. My plan was not to stack Bitcoin, but to stack a crap load of MicroStrategy with synthetic longs, because I couldn't do synthetic longs as effectively with the margin needs that I had with Bitcoin. So I did it with MicroStrategy. Also, I felt more secure with MicroStrategy because of self-custody makes me very nervous. But then the plan was always to sell the MicroStrategy and rotate it into Tesla. I'm not done with that yet. I'm at about 22%, but I'll get to 40%. I might keep 40 to 60% of my MicroStrategy, but I always think in terms of long-term plans and execute against them. And I'll stress this again, if you are investing and you don't have a plan, you're screwed, okay? You're driving in the dark with a blindfold on. You're going to drive off a cliff. Have a plan. Make a plan. Have a goal. I shared something today regarding how many Tesla shares to be a millionaire. All that simple stuff. Put that into your plan. And also play the cycles. We're going into the biggest AI cycle, biggest industrial revolution to ever hit the planet. And I talk a lot about it. And thank God I haven't freaked anybody out by talking too much. Maybe there's a lesson there somewhere. Yeah, Tom Lee said Bitcoin is going to easy 200,000 by the end of the year, but Tom Lee also said ETH is going to 63K. I think that's a bit nutty. How do you pair trade if you have to pay 42% tax gains? I pair trade in tax-free accounts. That's a very good question from Martin. That's, my goals are not your goals. I'm very different. Both my parents died at 65, so I never thought I'd make it to 65. So I never believed in retirement accounts. That's why I made a plan to retire at 50. That's it. Here we are. So if you do have retirement accounts, bloody hell, get familiar with pair trading. It's unbelievable. But because only a tiny fraction of my net worth is in tax-free accounts, I can't enjoy it as much as other people can. And if you have a Fidelity account or a big 401k or something from an employer, and you can get it into a Robinhood, turn it into an IRA, do that. When you're locked down in a 401k and very limited choices of assets, you're screwed. You can't really pair trade. So same thing for the assets you may be susceptible to in other parts of the world as well.
Yeah, Robinhood is great. If you can get your retirement into Robinhood, you should.
Yeah, exactly. Tax-free is important. Ingrid is back again. Hang on a second. Let me see. I love to see women in the community. So James says, beginner, in terms of your trading tools, is it best to start with IA ATR and IA optimized trend? We have some people that trade on IA optimized trend alone, just that. And they perp traded. They use nothing else. And I'm a very big believer in less is more. Find what you like, do some paper trading, have a journal, write down your thesis. I heard Mando repeating almost me and Mopbots the other day on last week on DCA. It was incredible. But yeah, before you enter a trade, know why you are entering your trade, know your exit, know your profit plan, etc. Absolutely key. And then you find a rhythm that works for you and you keep repeating and fine tuning. That's how you kill it in the markets. NAVs for treasuries, digital asset treasury companies, getting hammered right now all across the board. DFDV is trading at a discount like UPXI was as well. Mataru, I'm getting shouted at as well. I've got to run to another meeting real soon. But last question, and a big thank you to everybody for Jacob being part of the team and being here with us and focusing on helping the community. From Santi, is October and Moonvember still on the cards? Thoughts on extended cycle? I think there's a 30% chance we have an extended cycle, but I think October will be brought forward into late September and Moonvember into October. So I think everything's shifting a little bit left by about 30 days. But then again, I do expect a new all-time high, possibly if history repeats, of Bitcoin when it chases gold. The fact that gold is running so hard shows you how screwed the fiat world is, okay? Everybody, like this chart is freaking ridiculous, as Jacob's showing here. I think it's gold. Is it gold?
It's GLD here, but I
can.
Yeah.
Yeah, so that's kind of my theory on this. Extended cycle, we'll see. The treasuries, the problem is the treasuries getting hammered right now. If the treasuries get hammered so much and they're forced to sell their Bitcoin bags, that could trigger a bear market. I've been talking about this all year as well, and that's a big concern that I have. If I do see signs of that coming, you'll know about it and you'll hear about it on Patreon instantly. Thank you, Phil, for coming. Glad people enjoy it. We'll get these back on the calendar as well every month. People love it. People need it. These are important times. We've got 2 years to make a difference, and then that's it. The machines take over. But we can buy exponential assets cheap right now in relative terms to what they're going to do. Big thank you again, Jacob. Thank you, K8. Thank you, TND Tesla, G De Niro, Crypto Cruiser. The whole gang is here. Appreciate everybody for coming. All 400 people watching live. Have a good night, everybody. Bye. You want any final words, Jacob? Am I talking?
Have a good day, everyone. No, yeah. Find your rhythm. You don't have to know everything. Just find 1 or 2 things that you're good at.
Yeah, and stick with it and practice it 10,000 times. That's the secret.
Yep.
Cool. Thanks, gang. Bye.
Thanks, everyone.